Happy Halloween. We have First Solar before us. 1:28 p.m. Pacific Standard Time. Halloween. How about that? Make sure you don't eat too much candy. 10:20 was a move back a year ago in October when we were trading this for solar stock back then. And a year later, in October, on the last calendar day of 1031, is that we have a halted stock. They've halted the stock in after hours due to a report. They beat on the bottom line, they beat on the revs, and they guide FY13 EPS above consensus. However, the kink is revs below consensus. So they did well, and those revenues came in from 2012 over a period of time, the third quarter of 2012. What I would like to say, one thing about these earnings and the way that this report is released, is there's some kinks in it. And we're going to go over it. We're going to go over how they raise the EPS guidance. They lower the revenue expectations. Gross margins guidance was raised. That's always good. See, they're raising that to 24 to 26% from 22 to 23%. Operating expense remains at 390 to 410 million. CapEx is lowered. Here's the key. CapEx is lowered to 300 to 350 million versus 350 to 400 million. Well, that's about $50 million difference in there. And CapEx means that, what they're going to spend in developing and what they need. So, as we go through the report, we're going to find out where the kinks are and what the bright spots are, but forward looking is what we're looking for. So I can say that the headline number was a great number on the revenue side, and revenues rose 50.8% year over year to 1.26 billion versus the 1.02 billion consensus. So the revenue beat was handed, it was very nice. So, as it opens up, we're going to see where the high end of the trade goes, because right now it's halted because of the news. But we're going to get more into about how the street looks at consensus below. What is the consensus? Below means revenues below. That's below. So the stock is halted. And remember what Facebook had to say the other day. We don't know exactly what this is going to do, but I'm going to put it on pause. They're going to open it in 5 more minutes. Say that. One of the things that we'll tell people in First Solar, there is a lot of shorts in the name. And because now that the stock is halted, once again, I'm going to tell you about a halted stock. They gap it up above the shorts. The shorts are going to have to buy the cover to scramble out of the name, which would take the price higher levels. So we're going to look at the total range and what that whole short squeeze looks like, if that is the case, which I believe it will be. Time is 1:31 p.m., 10/31/2013. Here we go, everybody. We got a gap to $55, just as I expected. It's now 1:35 p.m. Pacific Standard Time, 10:31. This is an earnings release on First Solar for the new MTs to understand what these earnings are about, how to decipher them. Are they manipulative? Shorts are in the name heavy, which is going to propel this name up. This is the knee-jerk reaction, and we're going to come back to it. And the lesson learned is how to trade this after hours earnings when a stock is halted on an old high flyer, is what I called it. First Solar's been around a while, and it used to be a high flying stock. And it trades at a much lower beta price than what it used to. But nonetheless, we can see that that $56 high right here is where they moved in, 56.12 on that short. Now, we talked about the earnings report, and we thought that there was a little bit of kink in the report. Okay? Up $2 and $3.20. So we're going to see where this levels off, and we want to understand how they beat on those great numbers, but we also want to understand more about why are the revenues forward looking, why are they guiding those revenues down, and the other things they had EPS guidance up and things that I had talked about. So once again, we're going to trade it, and we're going to see how it continues to trade. We're going to see how they take that news and how the short sellers have to buy to cover because the price gapped up. That means they're losing money, and there was a lot of people short going into the report.